Hey guys, Adam here at DirectionTrader.com. I'm going to record a trade here if it sets up. I'm not sure. We're still in the setup process here, but it's pre-market. It's before the trading room here, and basically what we have here. This is a smaller time frame, 233 tick. We have some resistance here, which is a Fibonacci short on the longer time frame, and it's the third time actually testing this level. We came up once, tested it, twice, tested it, and sold off. Didn't get to our final target, so we're testing it again for the third time. And the only reason I would take a third test short here, one, the dollar has to be bouncing up, or once it hits resistance up here, dollar has to be bouncing off support. And two is divergence, and that's the main reason I'm watching this so closely. As I have my momentum indicator down here, and if this makes, see how I had a nice high here at this price, if this happens to come up, retest one of these two levels, somewhere in this area, it's not an exact science, retest it and then start to roll over, and we make a lower high on the momentum down here, I will short this, and I will show you exactly how I manage this position. I'm going to use one contract, and there's two ways of managing. One is to do a one-to-one risk to reward. So say, depends on what this is. It may be anywhere from a 6 to a 12 tick stop, and we'll make that our profit as well. Or we can do that exact same setup, but then learn to trail it. So I'll make that decision whenever I watch the trade play out here. I'm not sure, it's a little bit slow being right now, but we'll see. Once it starts to move, I'll make that decision. But I just wanted to jump on here and let you know what I was looking at. I'm probably going to have to pause this because it'll just get entirely too long. But it is pre-market, and I just wanted to show you this setup, and I'll show you how it is. So it's it's a micro counter trend setup, but it's a very, very high percentage strategy. So let me pause this video, and I will come back and show you. I'll show you the setup. All right, let me jump back on here real fast. I put my order out at right here at 49. As soon as it trades back down, I just put it out there, so I put it out at 49. It's a stealth stop. As soon as this hits 49, I'm looking for the red candle. That's what I'm looking at. These are Heikin Ashi bars. These are a little bit different than I'm filled. All right. I'm going to put my stop one tick above these highs, so at 50.10, so 50.1, and then my first target actually just got hit. I didn't get the order out fast enough. Sorry, I'm on a laptop here. It's my dome is actually to the side. I'm recording this video pre-market before I get in front of a big computer. And there we go. Touching. I didn't get my order out fast enough. It would have been filled, and now it's filled. All right. So what happened there? Sorry, it was so fast. Yeah. It's what I did was I entered at 49. As soon as this market came up, basically it retested these highs, but I look down here at the divergence. Look at the momentum made such a lower high as this market spiked up. So we have a lower high in momentum, but yet a higher high in price here on the micro level. So I entered short, and I just did a one-to-one risk to reward on this trade. It's high percentage. As soon as this Heikin Ashi turns red, I enter a limit order right below the previous bar. So it happened to be at 1649 was my entry, and I was doing a one-to-one. So I had my target down here at plus 10, stop at minus 10. I wasn't even able to get my orders out there fast enough for my target to get hit. So that was like a perfect setup. Now I'll basically describe what I would do in a trailing stop right now. I'm out. I'm not even in this anymore. I took a single position and did a plus 10, minus 10, and I'm already out of it. So basically now what I'm going to do is I'm just going to describe what I would do in the trading room if we were entering a trailing position. Basically we use these Heikin Ashi bars on our reversal trades. Now, if we trade a pullback like a Fibonacci trade, we just enter whenever it pulls back. We don't wait for confirmation here of the candlestick or none of that. But if we're doing counter trend, especially on these micros like this, we want confirmation. So yes, we don't get it at the exact high, but we don't run the risks of just blowing through and stopping us out, immediately. So we wait for a little bit of confirmation, of some sellers to actually come in here, and then we enter. That last position, the candle, the Heikin Ashi candle started turning red, so I entered short at 49, put my stop above the high, and one-to-one risk. I had a profit down here at 1648, which got hit virtually immediately, which is common when you're trading gold, crude, Russell, markets like that tend to move really fast, and then they have less volume, so whenever it does come in, they really move. The ES tends to be a little bit more choppy. The Euro is kind of an in-between market, but basically, if we were just to trail this now, we would have our stop up there. We'd be moving it down by now. We'd be at a risk-free trade, and I'd keep on putting my stop one tick above the high of the previous candle. So right now, the high of the previous candle here would be at 30. So 1648.3. So 0.4 would be the stop here. 1648.40 would be the stop right now. So we'd still be in this position. Definitely guaranteed 6 ticks on this. I'll just keep letting this play out. Obviously, I'm out of the market, but I just wanted to show this trailing strategy that I use in the trading room. But on this particular example, being pre-market, I'm not looking for runners. I just wanted to take a high percentage, quick profit. So, yeah, the strategy itself is very high percentage. So, let's just keep watching here. The stop would have been right here at 40. 48.40, a tick above these highs, and let's just keep watching here. We're not going to move the stop down until the candle actually finishes. So as soon as the next one comes, the reason we're able to do this with these candles, the Heikin Ashis aren't normal candle bars. They use multiple bars price action, so they don't turn as quickly as a regular candle bar, like a high, low, open, close candle bar would. If you're going to notice here, every one of these Heikin Ashi candles, they open at the midpoint of the previous bar. Every single one of them. They open at the midpoint of the previous bar. You see how that works? So that's why we're able to do this with this strategy. So I'm just waiting here. In this particular example, we would have 6 ticks right now, and just waiting for a runner. But down here, we see the momentum is still selling off, still making lower lows. So everything is good to the short side. The dollar, going back to the dollar has bounced off support right here. Whenever the market came up and retested these highs right here, the dollar was at support and has now started to bounce up. It hasn't bounced a lot. It's kind of just sustaining there, but the dollar is at support. So it would take dollar breaking support and the gold breaking resistance with a divergence, against it in order for us to, just immediately get stopped out here. So, all right, now that bar is formed, we would have moved the stop down here to 48 because 47.9 is the high of that candle right there. So 48 would be the stop now, which is where we actually got out of the market at. So let's just wait here. So worst case scenario, we would, on the trailing position here, we're looking at 10 ticks per contract. Very high percentage strategy here, guys. You can see it's minimal risk. Waiting for confirmation. We tend to get at least a first target on these almost immediately. How I would do if I had planned to trail this, I would have set the orders out there, the stop order. Oh, sorry about that, guys. I would have set the stop order out there, and then as soon as it went 5 to 6 ticks in my direction, I would have started trailing by moving my stop to my entry price. So I would usually you have a minimum of a break-even trade almost immediately. So that's kind of how that works. So let's keep letting this play out. And there it goes. All right, so now your stop is one tick above this, which would be 47.9. So we got another tick out of it. We're just waiting here, guys. Just waiting here. Let me pause this. I'll come back whenever this starts to pan out. But we will see. Back real fast. That position would have been stopped out right here. Basically, we kept trailing down a tick above these highs, and the final here happened to be at 47.2. So you would have got another 8 ticks out of it if you had trailed. I just did a 1-to-1 risk to reward and got 10 ticks. If you were to use that trailing strategy, you would have gotten 18. So that's how it works. If you like it, or you think that's interesting, or you have any interest in watching me trade, I have my dome up on another computer. When I'm actually in the live trading room, I'm actually on a laptop right now trading pre-market. But come by the live trading room at directiontrader.com and take a trial to the live trading room. All right, you have a good day.